Ladies and gentlemen, good day and welcome to the Quick Heal Technologies Limited Q3 FY22 earnings conference call. We have with us today Mr. Kailash Katkar, Managing Director and CEO, Mr. Sanjay Katkar, Joint Managing Director and CTO, and Mr. Naveen Sharma, Chief Financial Officer. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Naveen Sharma from Quick Heal Technologies Limited. Thank you, and over to you, sir.
Yeah, hi. Hello and good evening, everyone. I am pleased to welcome you all to our earnings call to discuss our Q3 and 9-month FY22 results. Please note, a copy of all our disclosures are available on the investors section of our website as well as stock exchanges. Please note that anything said on this call which reflects our outlook for the future, which could be construed as a forward-looking statement, must be reviewed in conjunction with the risks that the company faces. Let me now hand over the floor to our MD and CEO, Mr. Kailash Katkar, to talk about major developments and key initiatives. Over to you, Kailash.
Thank you, Naveen. Good evening, ladies and gentlemen. Trust you and your dear ones are well and safe. Thank you for making the time to join us today to discuss the Quick Heal Technology results for Q3 and 9 months. I would like to take this opportunity to update you about the key developments for the quarter. We had a very successful Q3 with a growth in revenue, earnings and cash flow. Again, despite COVID challenges and considering last year's spillover, 9 months are not comparable, but still we have achieved at par result. Naveen will definitely cover our financial performance in detail in his comments. We have witnessed massive digitalization in the last couple of years. The cyber security industry is going to follow the outspace and emerging use cases. We find ourselves into the right place at the right time to cater to and latch on to the opportunities that the world is presenting in front of us. We have been slowly and quietly preparing ourselves for the win. Today I will be touching upon few elements of our transition along with our way ahead. During the quarter, both our businesses performed well. We are a legacy in the retail antivirus business and command market leadership in the geographies that we mostly operate. The business is strong and constitutes about 75 to 80% of our overall business. On the other hand, we have been incubating a new business within the company since past few years to serve enterprise customers at large. Currently, it has become a sizable business for us within a few years of operations. It has been growing at a fast pace and we foresee that to continue in the times to come. We have onboarded industrial experts from cross-global in the product, sales, R&D, finance, HR domain to lead us to where we intend. We work with attrition rate lower than the industry, owning to our employees' value proposition, a great culture and empowerment. We have continuously upgraded our product offering to our retail customers and launched a new version with a focus on data privacy, which is the need of the hour. Talking about our enterprise customers, we have launched new products under the Securite Hawk series and have a very strong pipeline of the next generation products under development. While our retail business currently is mostly driven by Indian market, we have also started to spread ourselves globally through the enterprise segment, For the 9 months of financial year 2022, roundly 18% of our enterprise business is coming through global market. We are setting foot in new geographies, and you can expect growth in these numbers going forward. We are into business commanding over 95% in gross margin and have a very strong balance sheet and are a debt-free company. We have been funding our R&D marketing investment, through our internal accruals and charging it into our P&L. While on the inorganic side, we are in a constant lookout for strategic opportunities to fuel our growth momentum. Apart from the roadmap we are in for a future, we have been continuously and constantly rewarding our investors through dividend and buyback program and will continue to do so. As a company, we are working extensively into building a 3-year roadmap for us, and we will be talking about it in the next quarter. Now I would like to hand over the floor to Mr. Sanjay Katkar, Joint Managing Director and CTO. Over to you, Sanjay.
Thanks, Kailash. Good evening, everyone. Before I speak about trends in cybersecurity market, I would like to discuss a couple of points. During the quarter, Seqrite bagged Advanced Approved Endpoint Protection 2021 test certification for its EPS range of products and solutions, offering protection from unknown, advanced, sophisticated ransomware and APT attacks. Also, Seqrite EPS received AV Test Top Product Certificate for stopping the most sophisticated malware with perfect scores on the parameters of protection, performance, and usability for the second time in a row. On the product side, to which Kailash referred earlier, we have continuously upgraded our product offerings and have launched a new version of our retail consumers with focus on data privacy. For our enterprise customers, we have launched new products under the Seqrite Hawk series. And with this launch, we are aiming to redefine enterprise security with comprehensive solutions to secure their digital transformation journey. We will continue to gradually invest and add more products under the Seqrite Hawk series that will mark our foray into the endpoint detection and response, EDR as we call it, zero trust, data privacy, and cloud-based network security products. On the cybersecurity trends, Q3 proved unexpectedly fast-paced for various sophisticated attacks. Our record shows several thousand attacks per day on some days. In Q3, the new ransomware groups quickly capitalized on some of the most dangerous vulnerabilities in the wild. Our research underscores that ransomware continues to evolve and is becoming more dangerous based on the catastrophic damage it can inflict on the target organizations. We continue to see ransomware attacks, coin miner attacks, and phishing attacks aggressively increase in sophistication and frequency in Q3. To conclude, I would like to say that as we sail through the pandemic and as we become more and more reliable on digital infrastructure to solve our day-to-day needs such as being connected to work remotely, digital learning and payment, demand for our security products and solutions will continue to remain strong. With this, I would like to hand over the floor to our CFO, Mr. Naveen Sharma, to discuss our financial performance with you.
Thank you, Sanjay. Let me now take you through the financial highlights for the third quarter and 9 months ended December 21. Historically, Q3 has always been a weak quarter for us, but still we were able to deliver good growth in Q3 FY22. In Q3, Our consolidated revenue from operations grew by 13.9% to rupees 796 million, compared to rupees 699 million in Q3 of last year, driven by strong growth in the enterprise business and higher renewal rate on consumer segment. 76.4% of the revenue for the quarter came from retail segment, whereas 23.6% from enterprise and government segment. EBITDA for the quarter was up 24.4% YOY at rupees 205 million compared to rupees 165 million in Q3 of last year. EPS for the quarter stood at rupees 2.45, up by 17% YOY. The 9 months results are not comparable as the financial numbers of Q1 FY21 includes revenue spillover of rupees 300 million from Q4 FY20 due to non-availability of transport facilities due to lockdown. If the revenue spillover of rupees 300 million in Q1 FY21 is left aside, we have registered over 20% growth YOY during 9 months of FY22. Even after considering the revenue spillover, we have recorded modest growth of 4.6% in 9 months YOY. In line with our continued focus on R&D and innovation, we increased our investment in R&D by 25% on YOY basis, and it stood at rupees 213 million compared to rupees 170 million in Q3 of last year. Other income during the quarter has gone down by 42% YOY to rupees 36 million from rupees 63 million in the last year. This was partly due to reduction in the treasury side due to buyback and also partly due to fall in the treasury yields. With this, profit after tax for the quarter increased by 6% YOY to rupees 143 million. PAT margin for the quarter stood at 17.9%. Cash profit after tax during the quarter stood at rupees 188 million. The effective corporate tax rate for the quarter was at 26.99%. Overall, to sum up, we managed to have substantial strong growth, and we are confident to continue this growth trajectory in the coming future while the economy continues to recover. With this, we will now open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Bella D'Souza from Anand Rathi. Please go ahead.
Hello, good afternoon. Thanks for taking my question. I have 2 questions. The first one being, what is your ARPU for retail segment in the current quarter? Has it gone up? Secondly, our working capital days have gone up compared to last year. Can you throw some color on it, and could you provide an outlook for the same?
Yeah, hi. First, this is respect to ARPU. So basically, what currently you must have seen that we are operating at 96%, 96% gross margin. Hence, what we are focusing is on increasing the revenue through multiple ways, and hence we are not currently much focusing on ARPU. And again, this ARPU has a lot of business dependencies. This is part 1. With respect to working capital, yes, overall net working capital days increased to 110 days versus 76 days in December 2020. The increased capital days was a result of the increase in receivable days from 127 days to 63 days. As you might know, several small and medium-sized enterprises are currently impacted with lower liquidity due to lockdown restrictions imposed earlier, which has severely impacted their business. We have taken adequate measures regarding collections. I would also like to highlight that almost more than half of the total receivables are with our top 20 distributors, with whom we have been doing business for several years. We are keeping a close watch on these receivables, and we are confident of their collection. We will continue to maintain our financial discipline and expect the debtor days to reduce over the next 2 quarters. Yeah, Della?
Yeah. Hi. Sorry. Thank you for answering my question. That helps.
Thank you. The next question is from the line of Rahul Talwar from Sharekhan. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Yes, sir.
Yeah, thank you. Thank you so much for taking my question, and heartiest congratulations to you all for a great set of numbers. So my first question is, your enterprise security segment, SecRite, is growing at a very fast rate, and it already constitutes almost, say, 25% of your total revenue. Where do you see this in the, say, next coming 3 to 5 years?
So actually, as I have already answered this question in past investor calls also, that we are aiming to have 50% in next 3 years time, where we see that enterprise revenue should grow up, and we are very much confident about it. Even if we don't touch to 50%, but we will be very close to 50%.
Okay, sir. That answers my question. Sir, my second question is, so we have been developing products that is, targeted towards SME and large enterprises in, say, last couple of years. Any concrete deal which has happened in this quarter? If you could provide any insights on that.
Not specifically in this quarter, because those products are about to release. Some of the beta version has come out, and we have started doing beta testing with few of our customers, and we are getting very positive response from the customers. So revenue is yet to start for those new products.
Okay, sir. Understood. Yeah, so that's all from my side. Thank you so much for answering my questions.
Yeah, and that is the reason it is giving me confidence that my enterprise ratio will go to 50% actually.
Okay, sir. Understood. Thank you, sir.
Thank you. The next question is from the line of Nishan Khandelwal from Globe Capital. Please go ahead.
Yeah, good evening. Congratulations to the whole team on a great set of numbers. We can see the revenue has grown around 14% on a YoY basis. I just have a couple of questions on the R&D side. First of all, what was our R&D spend during the quarter as a percentage of total revenue? Can you please give us a light on that?
So Nishant, in current quarter, our total R&D spend is 27% of revenue. And on 9 months, our R&D spend is slightly higher than 25% of our 9 months revenue.
Okay. Your investment in R&D has gone up significantly. It is somewhere around 230 plus millions in the consolidated basis. I mean, is it targeted towards the enterprise segment only or the retail segment also? The reason I'm asking this question is you are already a legacy in the retail segment. So I'm just wondering where this whole spend is on.
Yes, so Nishant, our R&D spend is a mix of retail and enterprise, but you rightly said that majority of this new spend, or it's a majority of increase, is on account of R&D investment on enterprise side of the business.
So you are still focused more on the enterprise segment for this R&D spend, right?
Yeah, because on retail side, the investment, we already had made those investments in past, and those investments are really results. So as of now, there is no much fresh investment is required on retail side other than a regular maintenance spend for R&D.
Yeah. Okay. That explains it. Okay. Thank you, and wishing you a great quarter ahead.
Thank you, Nisha.
Thank you.
Thank you. The next question is from the line of Kanika Sood from NVS Research. Please go ahead.
Good evening, and thank you for this opportunity. Congratulations to the management on the good set of numbers. My question is on the product development side. So can you please give us some flavor on the planned launches and the timelines by which we can expect them to be out in the market?
So this New product is like currently we are in the process of launching a couple of products actually, but at the same time we have planned a detailed discussion on our future roadmap in our next quarter discussion actually. With this, I'll say, okay, we've already launched endpoint detection and response product in this quarter, which we assume that we are going to enter the EDR market with the launch of this product, which is purely for large enterprises, and we'll be soon launching a privacy data protection product again for a large enterprise.
Okay, thank you. That is helpful. Do you mind sharing how many new products we are planning in total? And are these products that we are planning, are they focused on the enterprise segment only, or are we seeing anything on the retail side?
So majorly products are focused on enterprise side, and as I already mentioned in my speech about, we are building a 3 years roadmap, and that we will definitely like to talk to all the investors in coming next quarter, part of it.
And Kanika, just to add, see, retail business is currently retail business or legacy business is quite mature business, where whatever investment or let's say sort of larger products, those are very much there, and the market is not changing very drastically. Hence, majority of new product development, majority of spent on R&D or investment on R&D would be happening on enterprise side. And as Kailash said in his initial commentary, next quarter we will be there out with a detailed 3-year roadmap where we'll be discussing about all aspects of the business, right from team to product to our M&A strategy. Everything we will be discussing about that at length and in detail in next quarter.
Understood. Thank you for explaining that. That's it from my side. All the best.
Thanks, Kanika. Thanks, Kanika.
Thank you. The next question is from the line of Vivek Ganguly from Nine Rivers Capital. Please go ahead.
Yeah, thank you for the opportunity. So this was on the enterprise business. Quick question. Historically, even in the retail front, you all were very India-bound company kind of, and now we are seeing a significant portion or a respectable portion of your enterprise business coming from global non-India markets. So can you just give us a flavor of what the thought process is? How would you all be selling? Would you all be having a partner there who would be doing it, and which regions you all are targeting, near India regions? Some sense, because we see there's a lot of opportunity. And if you all are also taking your enterprise global, would it also be possible for you all to also turn your retail model around into a more India plus model?
So I got your question. If I have to talk about the retail part of it, yes, when it comes to India, the brand popularity is very strong, so it becomes easy for us to build a business for retail from India and neighboring countries of India. And when it comes to the global market part of it, I see it is more comfortable to take enterprise products to the international market. It is just because we directly reach out to the customers to sell the enterprise products, and because for the retail it happens mostly through online, and we are present at present we are available online in India, and as well as we are working with some of the other international country online platforms also. And for enterprise, we are working through the partners, and we have a good number of partners in some of the countries like Italy, Spain, African countries, Middle East, even Asia Pacific countries. And through that, we are trying to reach out to the enterprise customers, and we could able to generate close to 18% of revenue from total enterprise revenue part of it.
So just as a follow-on to that, in the markets, in the markets where you have taken your enterprise product. So your partners, they would be IT consultant firms, or they would be very specific security consultant firm who, as a part of their entire offering, from service products, they have the option to include Quick Heal Enterprise as a part of the solution that they provide to their customers.
They are mostly system integrators actually.
Selling security products.
Selling security products. Specifically, their specifications are more into security products.
Okay. Got it. Thank you. That's all from my side.
Thank you.
Thank you.
The next question is from the line of Keshav Garg from CCIPL. Please go ahead.
Sir, many congratulations for good numbers. Sir, I had some doubts. Sir, so now our retail business is around 75% of our total revenue. And so this enterprise business we started few years back. So basically, if we take out the enterprise revenue, basically a quarter of the revenue, so then basically on trailing 12-month basis, our retail business is around 250 crores. And sir, if we see then even 5-6 years back, we were doing around 250 crore revenue only when enterprise business was not there. So basically our retail business is either stagnant or declining. So is there is my thinking correct, or you would like to correct me somewhere?
Yeah, hi Keshav. See, there are two aspects to it. Aspect number one, we all understand and appreciate that there has not been the expected growth from the organization in last few years. But and that's the reason that we are discussing that in next quarter we will be coming with a full roadmap on as to, or 3-year roadmap as to how we will be growing the company with right set of revenue. That is part one. B, if I compare it with last year, on absolute term, if you see, compared to last year retail segment, there is a degrowth of 2.5%. But the moment you adjust last year's number, as you are aware that there was a spillover revenue of 300 million. If you adjust it, then even in retail side on 9 months there is a good growth of 15%. So this is what in summary we haven't grown in past few years, but with right set of leadership team, with right set of product development which is there, and with right set of channel partners, or let's say sales line what we are looking for, with right set of having different means the enterprise business which literally was not there earlier, and we are clear that retail business growth would be very modest growth even in future. That is the reason why we are incubating a fast growth business, and enterprise segment which was a single digit contributor for past some time. Till this quarter we have reached to 25% level, and as Kailash already said that in next 3 years we want this business to be a 50-50 business, half of the revenue to be coming from enterprise without a degrowth in retail segment.
Sir, I wanted to understand that, sir, the last year, 21 calendar year, so the PC sale went up in the domestic market around 40-50%. So in that case, so since our antivirus is being used in PC, so then shouldn't our revenue also should have grown somewhere in the same range?
Keshav, there are two aspects to it. In fact, one of question was with respect to ARPU. So one part that revenue, the PC sale growth is there in the market, but at the same time, probably because of pandemic, people at this point in time are opting for antivirus product which is in their budget, and probably that's the reason you can see that, and that's the reason that ARPU on that retail segment is comparatively lesser. But this is a temporary phenomena, and we expect that ARPU should start increasing the way Sanjay has explained in his commentary, that sophisticated attacks or cyber attacks are happening. So probably we expect this phenomena of lower ARPU to correct it in coming future.
And most of the most of the new PCs that are sold come with some kind of protection for initial 6 months or so actually. So after that, the people start renewing or buying and putting a security which is a paid security actually. So yeah, definitely our team is making sure that we are trying to grab the surge in the PC sales market by addressing them.
Okay, sir. So do we have any partnership with PC OEMs like Dell, HP, etc., wherein we can pre-install our antivirus software with them? I mean, rather than the customer buying after buying a PC, can we pre-install it in partnership with the OEM?
No, at present we are not doing that.
Most of these vendors have partnership signed globally actually, and our experience also says that bundling OEM it's not it's very having a thinner margin. I mean to say actually it's in fact investment business actually. We have to invest. We have to invest into the per copy that they distribute along with the laptops actually. Apart from this thing, the only thing is we have to grab the market as the people start using it and as they start facing the challenges of threats actually.
Okay, sir. And lastly, sir, wanted to understand, sir, that since you are saying that from a quarter of our business, if enterprise government business becomes half of our business 3 years down the line, so then what will be the impact on our margins? Because margins in retail segment would be definitely higher than the enterprise segment. So then what happens to our margins 3 years down the line?
Okay, so as we said earlier that our gross margin is 96%, and that since we are a product company and we charge off all our R&D investment to P&L, gross margin, or let's say margin level, regardless whether it is retail or enterprise, we command that 95-96% gross margin. So which means any increase in revenue either on retail or enterprise will help us improving our operational margins.
Okay, sir. Thank you very much and best of luck. And so thank you for the regular buybacks also.
Thank you.
Okay. Thank you.
A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Aishwarya Suresh from Sushil Finance. Please go ahead.
Thanks for the opportunity and congratulations on the good set of numbers. So I have 2 questions. The first one is that what is the size of Indian retail cybersecurity segment and how well are you placed?
So I think we have answered this question in past investor call, so that there is no confirmed figures from any vendor, because it used to happen 10 to 15 years back that some of the media company used to do this survey, but for last so many years no one has done a particular survey for the consumer part of it. But whatever we gather the information when we meet the channel partners and the tier 1 partners which we have already across India, what we see is around between 650 to 800 crores market is there, consumer market is there, and we are obtaining up to 35% part of it actually.
This is for paid protection.
But this is all paid one actually. This is what I'm talking about.
Yeah.
Okay. And my second question is that how do you plan to gain market share? Do you have any number in mind which you'll be able to achieve in the next 3 to 5 years?
So we have a lot of strategies when it comes to gain more market share part of it, but that keeps on changing on regular basis. It totally depends upon market driven, because entire thing is driven by the market channel partners and the e-commerce partners actually. Through that we have to report to the consumers actually.
So, there is a market for a different segment of customers. I mean to say, there's a different price point, and each price point has a different market size actually. And we are making sure that we are present in each of these markets with our offerings and pushing our products across our channel partner network as well as the online sales partners. At the same time, what we also see a lot of international MNC products that come and disturb the market with dumping the products at a very low cost. For them, India is a very small market actually, and to grab it, or maybe the partners are doing that. But many a times, certain area or certain pockets of the market get disturbed because of the product getting pushed at a very low cost. There we have to play well, and we being very well positioned in this market, we are able to come over these situations by pushing the right mix of products. So when there is such a situation, we come out with a lower range product, lower cost products which we have, and that's how we try to make sure that we at least maintain the market share, and wherever there is a gap, we try to get the market share from the competition actually. So that's always, I mean to say, it's a day in day out work for our sales team.
Okay. Thanks. That answered my question, and all the best.
Thank you.
Thank you. The next question is from the line of Reena De Silva from Mount Intra Finance. Please go ahead.
Hello, sir. Good evening. So firstly, I'd like to congratulate you on a great set of numbers. I have a couple of questions. So what is your view on the antivirus industry in the retail space? Like, how is it growing? What are your views? How do you think it will pan out in the future?
So antivirus, as we have been observing, there is a single-digit growth over the last at least 3-4 years, and it had earlier got impacted by PC sales, but as during the pandemic PC sales had went up, it had given a smaller boost to this consumer retail part of the antivirus product. At the same time, what we are also observing is there is a lot of things are evolving in this market. I mean to say, OS is evolving, and the kind of threats that we are seeing is also evolving. Like, as people are focusing more towards protecting the privacy nowadays, rather than in fact just ransomware. There's identity theft is bigger challenge. So as these things change, the market dynamics are going to change. So we are making sure that we invest into these newer features of the retail product and stay on top of the game. And for that, according to me, retail market will grow in single digits, but there will be certain push which can give it a bigger, little bigger push. And we are more focused towards waiting, or I mean to say, hopeful for mobile getting pushed in this segment, retail segment, because mobile has now become a key aspect of doing all kind of transactions online, digital. Everything is moving on mobile, and threats on the mobile front are also growing on that space. But it's comparable to PCs. They are at a very low rate right now. But this will change, and that's what we hope on the retail front. Mobile can be the one of the future growth segments.
Okay. Sir, also last quarter you mentioned that L7 is almost ready with the product. Just wanted to understand how long would it be before we start seeing the benefits?
So, Reena, basically L7 has from a stage where L7 was more into finalizing, or let's say completing its product development or testing it. They have already started generating revenue. The revenue generation, or it's a type of customers where L7 has ventured into, it's very impressive, and we expect this trend to improve in future.
Okay.
Yeah.
Okay. So that's it from my end. Thank you so much.
Thank you. The next question is from the line of Aryan Sharma from Monarch Network. Please go ahead.
Yeah, good evening, sir, and congratulations for the satisfying numbers. My first question is, we are sitting on a good amount of cash. So what is the kind of average yield we get on these cash and cash equivalents?
So hi Aryan. So with current market condition, 3.83% is average yield what we are getting from cash which is there in balance sheet.
Okay. And you also mentioned that you have a roadmap for the future 3 years or so. So is there any roadmap to utilize this cash for a better purpose or any plans for that?
Yeah, and of course, means when we are talking about growth, growth has to be comprehensive. That covers products, that covers both organic as well as inorganic growth. So that part that goes without say. And along with that, we have rewarding our investors in past to dividends and buyback, and we will continue the trend where a comprehensive growth for business is there, but at the same time, shareholders are also get right share of it.
Okay, noted. And then coming to the marketing side, as we say, we have around 30% market share, if I'm not wrong. So, is it correct?
Yes, 30 to 35%. Right, you're right.
Retail, but on retail side. Okay, yeah, retail side. But generally, when we do, for example, top 10 antiviruses in India, we don't feature in any of the sites. I mean, Tech Radar or PCMac, which are being used by a lot of individuals. So, are we not concerned for that kind of marketing or
Google?
See, we are operating in a different market. See, in India, when you say these magazines and all, they are being looked by a certain segment of users. But if you see on ground, on sales, if you see, for example, sale through Amazon, sale through partners, we are having the largest share of the sale that happens in India actually. And if you see the rating of the products or that, these magazines are biased, I mean to say, are driven by a lot of marketing efforts, but at the same time, there are a lot of certifications that happen through independent testing organizations like AV Test. If you go to the AV Test website, which is a German-based lab, and that is referred by Gartner, that is referred by all the large enterprises where they look for the technical qualities, performance of the product for protecting the threats. And these organizations test products every couple of months actually, and with the latest threats which are there affecting in real life to the larger organizations. And that's where in my speech today, opening speech, I said Wikil was figured in top products in that test actually, which compared to all the global players there actually. Global players, when I say, are Symantec, Avira, or even the so forth. And if you can go to that website, you'll see Wikil figuring in top products, which is for the continuously second time in this series, this year's series actually. And that really helps our sales and marketing team to go and pitch to the large enterprises or even government segment, and that's where it is considered actually. That's why we are seeing good enough traction on the enterprise front actually.
And that is the reason we have the maximum share in India.
Right. So we have more kind of an organic growth, you mean to say that, if I'm correct, yeah. Okay. So thank you. That's all from my side.
Thank you. The next question is from the line of Aditi Gupta from Bliss Consultant. Please go ahead.
Hi, sir. I have a question regarding your trade receivables. You have a very high level of trade receivables. Have you provided for them, and in future, do you expect a portion of the same to go bad?
Yeah, hi Aditi. As mentioned in my earlier part, yes, receivables have increased. A provision on a conservative basis, we have made some provision, like for the entire year, the provision is to the tune of 3 crore rupees. But these are more of aging based provision. And as I said in earlier part of commentary as well, that more than 50% of receivables are from our top 20 distributors with whom we are in touch with. We in and out, we understand their financial condition. So per se, even the provision which has been made, this is more of a conservative. We don't foresee any major surprise coming on collection front. The collection has largely been slowed down because of cash availability. Once the cash starts coming into circulation, we expect our receivables to go down. And in next 2 quarters, we will see this happening with our receivables as well.
All right, sir. And one more question I have, like, do we plan to increase the sales and marketing expense?
So sales and marketing expenses usually, see, as I have already told in past also, that our sales is seasonable. So when I say that, you know, Q1 is always bit down, but Q2 is on the upper side, and then again Q3 is a down because of the festival time, and then again Q4 is always up. So we have to really plan our sales and marketing expenses based on the buying seasonality, and based on that we have to spend more into the marketing and marketing part of it whenever this buying happens actually. Especially the year end is more budgeting time part of it, and most of the time most of the organizations and, you know, buyers, they buy product majorly in Q4 part of it, so, and Q2 part of it. So based on that, the advertisement expenses and marketing expenses take place.
And obviously, just to add that even if you see for 9 months, our total sales and marketing expenses are to the tune of 24% of revenue. So we always maintain a fair balance between and we also try to see that how the sales and S&D cost is helping to increase the revenue. So basis that will keep increasing the expenses whenever the need arises.
Actually, I would say that, you know, our expenditure when it comes to the product development cost part of it, it is stable all 12 months. Marketing, sales and marketing, like advertising cost will vary as a seasonal basis, and our sales will also vary based on seasonal basis. So usually, if you have to really compare anything, you should do it year on year. Better will be much better than compared to quarter on quarter, because we will not able to give right kind of justification for quarter to quarter explanation part of it.
Thank you so much, sir, and all the best for the coming quarters.
Thank you.
Thank you. The next question is from the line of Nidhi Singh from Newland Investments. Please go ahead.
Hi, good evening, and thank you so much for giving this opportunity. My question was mainly in terms of attrition rate. So I just wanted to point out that attrition has been a major concern for most of the IT companies and in the IT sector as whole. So, like, how has that impacted Quick Heal at large? Given that you did mention this in your opening remarks also, but just I would like you to throw some light on it. Like, you know, what is the current attrition rate, if you can provide for Quick Heal? Like, has it gone up from the past or has it come down, if that you can give? And also, what are the steps that, you know, we are taking which would be helpful in those terms? Like, you have mentioned that we are comparatively lower. So what is it that we are doing differently, or, you know, something that is being helpful for us in that sense, if like I've got it wrong, right in my part?
So yes, Nidhi, actually your question is right, and the entire industry is facing a lot of challenges about the attrition part of it when it comes to the software development companies. But if I have to tell about a Quick Heal, and if I have to talk about the software developers, developing engineers, and the customer support engineers, which is close to 50% of our employees actually. And definitely the attrition rate, if I have to compare with past of Quick Heal, it has gone up. and the entire industry is facing same problem. But whatever the industry is facing today problem, the attrition rate is close to 40% in industry, and quick heal attrition rate is close to 24 to 25%. So entire industry is taking a lot of effort, and we have also taken a lot of efforts to balance this attrition part of it and retain those employees and try to get more and more employees on board. Now those efforts I will not able to put it here because I really don't remember that part of it, because HR people really work on this part of it. But I just wanted to say that we have taken a lot of efforts to make sure that we retain our employees and get more and more talent on board actually.
All right, so that was really helpful. That was all from my part. Thank you so much.
Thank you.
Thank you. The next question is a follow-up from the line of Keshav Garg from CCIPL. Please go ahead.
Sir, wanted to know that how much is mobile antivirus contributing to our top line?
Keshav, mobile, as you are aware that in India, still the mobile the awareness of using antivirus on mobile is not there. So we are using a right strategy, mix of strategy with free and paid version at later stage. So this is something which we are also evaluating, that how in India that more than 600 million smartphone devices are there, and it has a huge market. But just we need to understand the customer behavior, and we need to see that how this segment can be catered through antivirus. So in summary, as of now, it's not that we are not selling much product. As of now, aware in industry itself is not there, and we are just trying to develop that awareness.
Percentage is less than 1% right now. Contribution.
Percentage is very less, and it is not only Quick is facing this problem. The entire antivirus cyber security industry is facing the same problem. People are not ready to buy security software for their smartphones. I don't know why, but this is happening everywhere globally.
Sir, a few months back in Ranchi, Jharkhand, on the FM radio, I heard your advertisement of Quick Heal for mobile antivirus or some mobile product. So that means that we are basically in the market and we are selling that product.
Yes, of course. The product is already available on website, in shops also. The product is ready, and we have to do this kind of activity for awareness part of it, because we cannot spend too much money on that part, because we knew that it is not generating revenue. But wherever we get these opportunities or wherever we get opportunity to speak on media, we definitely speak about mobile security part also, along with other security parts.
So why can't we get into a partnership with the OEMs who are selling mobiles like Oppo and etc.? Samsung.
See, we have already tried all those things, but we failed in that actually.
So actually, I'll add. See, OEM business is not at all revenue generating business. It has to be investment business. Phone owners or phone vendors ask for money to distribute the product on any product on the handsets actually, and it is not giving results because after expiry of the trial version, people don't renew it actually. So we have done that earlier, and we have also already doing that again, even in certain pockets of Indian market with certain vendors like Eyeball. Even Indian vendors are bundling our software, but if you compare revenue wise, it's not giving that big results actually. So our current revenues are less than 1% of our total revenue. The mobile contributes less than 1%.
And sir, what about the IT distributors like Redington and Ingram Micro? Is there a possibility of getting into partnership with them, since they are basically selling their wares and they have the distribution and everything, marketing setup?
We are already doing that actually. That is the reason we could able to generate at least 1% of revenue.
No. We are bundling, means we are working with these large retail like Ingram, Micro and all. They are working with our retail products for PCs as well as for
mobile also.
Yeah, both.
So basically going forward,
one part goes. It cannot be a push model. It has to be a pull model. In root, awareness among users need to be there, and today that awareness is not there. Hence, we are addressing it from root. Just pushing it through vendors, etc. As Sanjay also said, what it requires, it means on day zero you need to spend money, because these distributors or OEM expect money to install a free software on their phone, and once the software validity is over, no one gets the renewal thing is not done. So hence we are addressing it from root, and in place of pushing, we are trying to generate awareness, a full model.
Okay, sir. Thank you very much and best of luck.
Thank you.
Thank you. Before we take the next question, a reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is a follow-up from the line of Della D'Souza from Anand Rathi. Please go ahead.
Hello, sir. Thanks for taking my questions again. Just if you could share how much sales is coming from the online platform. Do we still have liquidity pressure on the traditional dealer ecosystem?
So Della, in this quarter, total online sales has generated 23% of revenue, and in last 9 months, online sales has generated 26% of revenue, of our total revenue. This is in line with how we performed last year. But yes, this is one of the channels which we are working aggressively to expand our business. That is part one. With respect to liquidity, yes, liquidity crunch is there, and in fact it is reflecting in our total receivables also. But a confirmation what we are one. So liquidity pressure is there, and it's reflecting in our receivables. But yes, all our channel partners are acknowledging the money what they owe to us, and we are working to get this money collected in due course.
Thank you, sir. That was very helpful. But also, could you please tell me how much of your revenue is coming from exports? Do you have any plans of entering into any new geographies? So
export on enterprise segment, 18% of our enterprise revenue is coming from exports. And overall total 4 to 5% is revenue which is coming from export if you take in totality. Second, to increase the export revenue, because this is one part which is not we have not tapped it appropriately or let's say in past. So what we are saying that in next 2 to 3 years we want our enterprise revenue to grow to 50% of our total revenue, and a significant part of enterprise revenue will be coming from export market. With that, in coming future we expect export revenue to grow up from here.
Okay. Thanks a lot. That's all from my end. Take care.
Thank you.
Thank you. As there are no further questions, I now hand the conference over to Mr. Naveen Sharma for closing comments. Over to you, sir.
Thank you all for joining the call. I hope we have been able to answer the questions raised by you. In case if you need any clarification or any additional input, you can get in touch with EY, our investor relations advisors. Thank you once again, and happy Republic Day as well. Thank you.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Quick Heal Technologies Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.